Welcome to the show, everyone. Very excited to have Simon Dixon back on today, friend of the show. And today is going to be a super juicy conversation, so make sure to stick around for the entire chat. We're going to be talking about the IMF's call for a great reset, the new Bretton Woods moment, weapons of mass financial destruction, a new Great Depression, all that fun and exciting stuff. Profoundly important topics, obviously, for investors. Obviously, for Bitcoin investors, it has a special emphasis. So very exciting stuff. And of course, if you do enjoy this kind of content, make sure to take a quick moment to hit the like button. It really helps this video reach a wider audience. Simon, welcome back to the show.
Yeah, great to be back. Seems like the world changed since we last spoke.
Yeah, it's been a crazy time. We recorded an episode earlier this year before all this madness really kind of started to unfold, and now here we are with just so deep into it. It's absolutely crazy times. Now, before we do jump into these juicy topics, you are bringing out a course called Retirement Plan B. So can you tell us a little bit about that? There's also a free video series with that. There's going to be a link down below where you can just check out that free video series. It's really informational, really great educational content. So do check that out. But Simon, give us just a little bit of information about that course.
Yeah, I mean, having been involved with so many investors over the years, like Bank to the Future, we've had over 100,000 investors that have been involved in crypto from the beginning. And traditional investors that didn't really get into this industry. I wanted to create something special for people at different levels. So spent the last several months trying to create the best video series. And one of the challenges was, as we were talking about things we think would happen, they actually started happening. So we were talking about Bretton Woods 2, and then Bretton Woods 2 actually started being called for. So I wanted to create a free video series. And the premise is, if I was starting from scratch today in the Great Depression of the 2020s, what do I need to know? And we cover like monetary history. We cover how I'm investing right now. And we cover the lessons and mistakes of some of the top investors in the world. And that's completely free. And then those that are actually looking to build a Bitcoin retirement plan, then at the end, we help people who want to structure it and do the legals, the tax, and all that type of stuff. But the idea is that the free video series is for those that actually want to know what to do in the current environment.
Nice. And I think it's such a good jumping off point for our conversation today, because we see everybody who watches the channel kind of knows enough about Bitcoin. And maybe if you're new to the channel, you might be looking for more information on Bitcoin. So it's a really great, way to get more information. But I think we see so many new investors coming in right now, and they've been getting Bitcoin wrong for so long, but they're starting to get Bitcoin right. You see all these big money guys coming in. And so what are some of the things that investors are kind of getting wrong about Bitcoin when it comes to like retirement planning, for example?
Well, I think the biggest problem in the crypto markets, and again, we've got different types of people, so it's hard to put them all in one category. But some of the problems that I've seen over the years is that people have got involved early when they may not have had some kind of tax structuring, and even the tax authorities didn't even know what it was or how it was treated. And so therefore, people did a lot of trading. They went in and out. They didn't really know how to deal with this stuff. And they may have accumulated a lot of wealth and end up in crazy situations where they might have to sell their Bitcoin because they overtraded and all sorts of weird things. Other things I've seen is that people believe in Bitcoin so much, which is something that I come from, that they end up not having any fiat currency. So because of that, they start planning their life around Bitcoin and end up, if they get on the wrong side of the volatility, not accumulating any Bitcoin because they are using it to meet their everyday expenses. Mm-hmm. Other problems we've seen is inheritance planning, huge problem. Not knowing how to actually pass on to their loved ones. And at times like this, people start thinking about it. The other thing I see is just putting all of their money into the latest pump and dump scheme or something like that, getting lucky, like a lottery winner. About 80% of lottery winners after winning the lottery are back to their original financial position within 2 years. And I've seen a lot of this in crypto where they get lucky and then they overexpose themselves and end up back in square one. So really, there's a lot to learn from traditional money management, traditional principles. But then there's amazing financial products that are coming out of the Bitcoin and crypto space. Really, there's the opportunity to learn from traditional markets applied to some of these amazing opportunities that exist in the Bitcoin market.
I think you've just described most people's journeys in cryptocurrency. currency there.
And the reason I can describe it is because I've been through a lot of them myself.
That's it. That's it. We all have to learn by the trial of fire. Now, I've been scrolling through your Twitter feed recently. You've just been dropping some absolute fire. Some of these conversations I really want to dive into. And the first one I want to kind of start off with is IMF's call for the new Bretton Woods moment. Now, I mean, when I heard this be announced as a political science student and economics junkie and all that stuff, I'm like, oh my gosh, that's big. That's big. They're calling for a complete reworking for the global financial order. So when you heard this call from the IMF for that new Bretton Woods moment, what were your thoughts on this? Is it worrying for you? I mean, obviously, we're not going to go back to the gold standard. Is this where, central bank digital currencies come in? What are your thoughts on this?
Yeah, I wish it would be awesome if we started to look at going back to gold standards, and then we could even have the conversation around other alternatives and Bitcoin standards even. But no, this is a call for more control. This is a call for a restructuring of the financial system. And this is a power play to try and restructure and reposition themselves, given some of the challenges that the dollar is going to face towards the end of the debt cycle. And so one of the things that became so important in this election is the IMF announcement just completely went missing in the excitement of the election and the challenges of the pandemic. But the reality is that the IMF, since the last Bretton Woods, where it was actually created, has been trying to introduce a global digital currency. They had SDRs and they have global overdraft facilities for developing countries. And this pandemic means that a lot of predatory loans have actually gone out there. And the IMF is positioned himself to negotiate the future of the monetary system. The last Bretton Woods was where John Maynard Keynes tried to introduce the Bancor, which was a global currency. And I think that now we've had a more socialist left-wing US president come through. I think that could be, not play in the favor of negotiating against the IMF when they call for these monetary renegotiations. So this is a really, really interesting time in financial history. And when they made the announcement, I tried to get some attention to it, but it just got drowned in the election and the pandemic. But this is really big things for those that study the history of money and where this is going next.
It's very convenient timing, isn't it? We always see how these really, really big things get announced that could affect the future of everything at a time when no one's really paying attention to that thing. It's
like the implementation of the Federal Reserve Act on Christmas Eve.
Yep, that's it. It's exactly it. They're so But so do you think that this means basically the impending death of the dollar if we're seeing this new Bretton Woods moment? Is that bad news bears for the dollar, or is it going to come out of this like some kind of a phoenix rising?
Well, I mean, the dollar has to end at some stage because every single fiat currency in history has failed. And I don't see the dollar being any different, especially with some of the debt policies that it's going through. Now, whether that happens now, or do not underestimate the power of the Federal Reserve and their ability to repackage and rehypothecate and use technology to actually launch central bank digital currencies and all sorts of other mechanisms that can come out. So I don't necessarily think that this is the end of the dollar, but when I'm speaking to investors, I'm talking about having a investment that means that the status quo still continues, having a strategy for when the dollar does actually shift in power, and having a strategy when gold and dollars and all of that stuff doesn't work anymore, which is the Bitcoin side.
Gold's been this bulwark of investing for thousands of years, right? But now we have the technological equivalent of gold, and to me, I have a bit of gold, but I have way more Bitcoin, right? Gold almost seems a bit old-fashioned at this point. It's the old money, right?
So it's again different strokes to different folks. So gold for 5,000 years has been a way of preserving your wealth. Bitcoin for the last 10 years has been a way of increasing your wealth. And so it's two different things. So a speculative store of value versus a store of value that's proven itself means that once you've generated wealth, you might want to take risk off the table and hedge and protect your wealth using gold. But Bitcoin has actually proven to be, the highest performing asset class. And so really, you put it in different categories of what you're looking to achieve. And actually, the combination of them is pretty good because gold can be a very hard thing to get access to in lockdowns, and you leave it in custody because it's hard to store. And at the end of the day, gold bugs always say, well, what if the internet goes down, as the criticism for Bitcoin? And I'm not saying, this is just about protecting against different scenarios. But they're actually a very complementary thing that you can use to your power in order to navigate some of the political uncertainties that lie ahead.
Yep, it's been a tool for a long time, and I'm sure it'll be a tool for a much longer time in the future, which is why I've got a small percentage of my portfolio sitting in gold. I want you to lay out your thesis for the Great Depression 2.0, the Great Depression of the 2020s, right? I mean, this is if people study history, the Great Depression was a rather terrifying event for most of the world's population. I mean, obviously there were some people who were able to scoop up the opportunity, but for most people it was a very, very tough time. So why do you believe that we're now facing that Great Depression 2.0 kind of situation, and what can we do to protect ourselves?
Yeah, so I coined the phrase "the Great Depression of 2020s" in a 2011 video that I uploaded to YouTube, and that kind of re-emerged as a result of the pandemic and came back to life. But there's several differences and there's several similarities. So, the Great Depression in the 1930s was a very challenging time because we didn't know much about economics back then. It was a new science that people were studying. We had lots of monetary history prior to that. But today we know a lot about economics and we have a lot of tools available to us. And so because of that, what we've seen is that regulators, policy, governments, and central bankers have created this complete disconnect between markets and economics. So traditionally, you would use the markets as a gauge for what's happening in the economy, but now those two have become completely disjointed. The reason for that is because very capitalist countries have become more socialist, and very communist countries are becoming more capitalist. So you see this best relationship with the United States and China. China is starting to look more like America every day, and America is starting to look more like China every day. And the two are merging in the middle into a socialist style of organizing an economy. And that is because of the excessive debt and the debt cycles that have been created by backing your currency based upon, fiat currency and excessive money printing. And so when you look at the economy today, you see, really troubling times for so many people. You see the ginormous wealth inequality. And that is because the central banks have been pumping money direct into the financial markets and direct into preventing real estate crashes. And those that have assets get a lot wealthier because all the money is benefiting those assets. Whereas the other side of that, you have these debt-laden people that can barely get above the debt cycle, living month to month. Mm-hmm. And really, when you have this interference in financial markets, where you say real estate is not allowed to crash anymore, then it prevents this wealth inequality reversing, where those that don't have the assets can't buy cheap real estate. And when you hit this record levels of wealth inequality, coupled with these debt cycles, you end up with a lot of turbulent times in the markets, and you have disjointed markets where now institutional investors are keeping their money in the stock market, because if you have a left-wing government that is more likely to push forward stimulus packages, then that's good for the markets now. And so really you've got central banks taking one side of the trade, pensions taking the other side of the trade, in a market that's not allowed to fail despite or whatever the economics are, which reaches a stage where you can have a ginormous black swan event and really troubling times that I'm forecasting ahead.
Yeah, I feel like the farther they push it forward, the higher the stakes become, right? You can only have, so many tens of million people unemployed, so many tens of millions of people kicked out of their homes, so many tens of trillions worth of debt. I think the U.S. debt's up to like 27 trillion, 28 trillion. Who's even counting anymore? It's a fictitious number that's never going to be paid down, right? It gets to the point of total insanity. So in this situation of a, Great Depression of the 2020s, are stocks kind of a no-go? Do you see stocks as being potentially way overvalued, and maybe stocks aren't something that investors should be looking at into their portfolios at the moment?
Well, in a normal conversation, that's exactly what you would be talking about. But people have been saying that for decades, and yet stock markets keep going to record highs. The reason for the stock market right now, if you take like the S&P 500, it really consists of 6 companies that have benefited from the bankruptcy of lots and lots of small businesses. So, when this pandemic broke down and everyone said small businesses aren't allowed to trade, everyone shopped with Amazon, everyone started watching movies with Netflix, everyone started getting their information from Facebook and Google, and everybody upgraded their device because their laptops were dying. So Microsoft and Apple benefited from it. And then you have 494 companies. So that makes up about 30% of the S&P now. Then you have 494 companies that need stimulus to survive, airlines and all sorts of stuff. And so you've got these two trends where the top companies, it's not really diversified anymore because you've got these top companies that benefited from global lockdowns. And then you've got other companies that are on stimulus. And so really the answer to that is if we were talking economics and markets, then that would absolutely be the right answer. But we are no longer talking economics. We are talking politics. And the politicians can either create runaway inflation, crazy deflation, they can perpetuate an economic Ponzi scheme through rehypothecation, or they can collapse the economy into a recession and depression. So really, the markets are politics now, they're not markets.
It's a really great way to describe it. It's so weird to think that we are living in this basically massive Ponzi scheme, which is the fiat debt system. And, most people are totally unaware of it because it's the normal thing. People in suits tell you that this is the normal thing, and it's become so commonplace, which leads me on to the next point of our conversation, negative interest rates. This is something that's one of those things, not a lot of people understand the implications of negative interest rates, but it's already the norm in the EU. I think it's coming pretty soon to the UK. I'm not sure if that decision's been definitively made, but I'm pretty sure it's coming quite soon to the UK. I think Australia just announced yesterday they're going to be doing negative rates. Can the USA really keep avoiding negative rates for much longer with everyone else in a situation of negative rates? So can you kind of break down why negative rates are such a cancerous thing for investors? And if you think that we will see negative rates coming to the USA soon?
Yeah, so negative rates are really the last monetary tool. If it weren't for central bank digital currencies, then it could only go to negative interest rates. But because of central bank digital currencies, you have these two last tools that central banks essentially have and policymakers have in their toolkit. Negative interest rates is a way of making sure that people don't save. It's costing people money to save. Is asking them, any savings that you have, please put into speculation, please put into the financial markets, because not only are we going to print and inflate away your savings, but we're also going to charge you for storing them. And so negative interest rates is a way of actually crucifying savers and encouraging people to get further and deeper into the debt-based Ponzi scheme as a last monetary tool in order to try and rehypothecate the system a little bit further when everyone started thinking about, well, many people have been living month to month. Maybe I need 6 months worth of savings. Oh, well, screw that. Negative interest rates. We won't let you save. Please, we need to, in economics, they call it the velocity of money. And one of the reasons that people or governments and policymakers may not be so favorable to Bitcoin is people like to save Bitcoin. And saving Bitcoin is not good for the system. They want you to recycle the money. They want you to increase the velocity. And now the ultimate way of increasing money velocity is make it really suck for you to save.
Yeah, it's a criminal-like system. I mean, I see some of the big banks in the EU are already passing on negative interest rates to their customers. Now, it may not be a lot to start with, right? Minus 1% a year or minus 1.5% a year. But if you're sitting on $1 million or $10 million, whatever it might be, that starts adding up pretty quick. And you look at it and go, well, I can leave my money sitting in this bank account, or I can, throw it into Apple stocks, and at least I'll get something back out of that versus losing money. And so we have this dangerous cocktail happening right now of financial weapons of financial mass destruction, as you like to call them. I think it's a fantastic terminology for them. And the other one, of course, is inflation. Legendary investor Stan Druckenmiller, he went on the record saying that he predicts that we could see inflation in the USA get as bad as 5 to 10% within the next few years. Do you think that is a realistic expectation for inflation? And just why is inflation so detrimental to an investor's portfolio?
Yeah, I mean, it's absolutely. And as I get, this comes down to, if we're analyzing traditional markets, then we would have had runaway inflation a long time ago. But instead, we're analyzing politics and different types of theories and where they can actually take it. So the economy does need a correction and does need deflation because, these asset prices have gone out of control. And they're not reflecting reality, but instead they will choose inflation, which is the process of increasing the money supply. And ever since, that's why fiat currencies have that velocity, because if you keep them in your bank account, your purchasing power completely decreases over time. And so you've got these double whammy with inflation. But certainly, I mean, that's why 2020 was the year of corporations entering the Bitcoin market. All of them applying at public companies because they wanted to take a percentage of their fiat currencies. If you're holding, a $500 million cash position and you're going to be holding that, then you want to put some of that into something that's not going to be inflated away, which has generated and pushed us after the halvening into the latest bull market in Bitcoin. It really was the year of the corporation, the year of the billionaire, and the year of the hedge fund deciding that they want to protect some of those.
Yeah, they need that. They need that inflation hedge. And it's amazing actually to see that narrative that we've been talking about for a while with Bitcoin really come to fruition, with these big money investors saying, yeah, we're actually buying this because we see the US dollar ready to go for crazy levels of inflation. And, they are buying Bitcoin as a result. Is there a tipping point with inflation where we see inflation just get to such a point where we have this kind of what happens in Zimbabwe or Venezuela or the Weimar Republic or any of these places where they keep pushing and pushing and pushing and pushing, and then there's that point where everything just kind of it goes the other way and collapses really quickly. Does that seem like a realistic scenario for something as powerful as the US dollar or as powerful as the euro?
Well, as we said, every single fiat currency has failed, and it always is a monetary inflationary problem. Every empire normally is, shifting based upon a currency war. And a currency war is normally just, as a result of governments or central banks, depending on their way of organizing their monetary system, trying to fund new wars or trying to print, larger sums of money. And so we are in such a scenario right now. Now, I'm not saying that there are monetary tools that the US can use in order to try and prevent that. Hence the conversations about central bank digital currencies. But the impact that this money will have on personal freedoms, liberties, and all sorts of stuff is really not a fun 1984 Orwellian economy that we tend to enter. But really, the power plays that you're seeing right now is that you have this, this China-America relationship. China has been empire building for many decades now, accumulating stockpiling as much gold as it can. It's been investing in global infrastructure, making loans globally. America has essentially been doing the opposite. Mm-hmm. And it's been funding and exporting its inflation around the world by, being this world superpower. And I think that there might be more time that the US can buy by using financial engineering. But at the same time, it will end at some stage. It's just a question of when, because every fiat currency does. And it certainly looks to me like we are at a completely challenging time when the economics and markets are so disjointed, and you need such incredible amounts of intervention from central banks in order to try and maintain what is a chaotic level of inequality in that economy right now.
It's actually quite shocking when you look at a list of who the creditor countries are and who the debtor countries are, and who has the most savings as a country and who is most in debt as a country. And it's at the bottom of the list is the USA with the most debt by far. And at the top of the list, it goes China and then Russia in terms of the countries that have the largest stockpiles of gold, largest stockpiles of foreign currency, who are, not in crushing debt to other countries. They, particularly China, is the creditor country now. They've completely swapped roles with the US from, 50 years ago when the US used to be the creditor country. Now they're the debtor country. which kind of feels like a full circle thing. And actually, I feel like our whole conversations come full circle as we start talking about the negative interest rates and the inflation, and it kind of all brings it back to that reality of the Great Reset moment, the IMF New Bretton Woods moment, and of course, then the role of Bitcoin in that situation. So with all this kind of taken into consideration, just for fun, of course, where do you see Bitcoin going over the next decade? I mean, we've seen some incredible price predictions from people for, $500,000 or $1 million. Are those just, total crazy fantasy predictions, or do you see these kind of large valuations for Bitcoin potentially being realistic after, let's say, a decade, right? We're talking about longer time frames here. I'm always telling investors, don't think about tomorrow. Think about 5 years down the line. Think about 10 years down the line for Bitcoin.
Yeah, and this brings us full circle to the retirement plan B concept, because the way I look at Bitcoin as a binary bet, it's either worth nothing or a lot and no in between. And events in between, you get a lot of volatility. And a lot of people discovering that the ability to own your own money, spend your own money, and have a fixed supply is useful for many people for many different reasons. And so the way that I think about Bitcoin, there's lots of different models out there. Plan B talks about stock to flow. We've got all sorts of things out there. But the reality is it's basic supply and demand. And so each year, Bitcoin for 10 of the last 12 years has been the highest performing asset in history, because each year the new people find reasons to want to own their own money, spend their own money, and have a fixed supply. This year was certainly based upon fixed supply. But as we start moving to more central bank digital currencies and more control, it comes about owning your own money and having the ability to spend your money, as anti-money laundering regulations ruin the use case of traditional money as well. So you just have these cycles, and Bitcoin solves those big three problems. So for me, the demand goes up over time, and there ain't going to be any more of them. Mm-hmm. So you hear these crazy numbers, and I don't really like to forecast because of the numbers, because I don't like the mindset that drives people into the get-rich-quick scheme, and that tends to be the psychology that helps people destroy their wealth, trying to make too much wealth too fast. Mm-hmm. And one thing I've learned is that I think most people, especially in crypto, they vastly overestimate what they can do in 1 year and underestimate what they can do in 5 to 10 years. And so really, this is about longer term investing. And that's what I've seen over the last decade between the ones that came out there as, life-changing amounts of Bitcoin versus the ones that over-speculated, lost it all. And so really, this is, I'm trying to encourage a lot more people to think a bit more long-term. And that's why it was the whole retirement concept. Because it's all about longer term thinking. And I think Bitcoin is, you can hedge with traditional markets, you can have some gold there, but Bitcoin is this asymmetric bet that either has, this crazy systemic event that means that it's worth nothing, or it's worth a lot if it continues doing what it always has.
I totally agree. That's why it's the number one in my portfolio, ahead of everything else, ahead of Ethereum, ahead of stocks, ahead of gold. It's Bitcoin. Simon, thank you so much for coming on the show today. This has been a fantastic conversation, just packed full of value. I'm sure everyone out in the audience really enjoyed it. Remember, guys, smash that like button up. And of course, there is a link down below to Retirement Plan B. It's 4 free videos, so do check it out. More great information packed in there, so make sure to have a check of that as well. Simon, thank you so much.
Okay, great to have me, and see what it's going to be like in 6 months when we do this again, I guess.
Yep, that's it. Thank you so much.